Alright, thanks for tuning in, guys. This episode we're covering my swing trades. It's Thursday, February 7th, 2019. Um, so, for those of you guys who watched my past episodes, you will know that I'm currently holding positions, or I was holding positions in NVDA and CRON, both to the short side. And also had USO contracts. So I have closed out all my positions, and we're going to get into why here in a minute. But to sum it up, guys, the reason all my positions were closed out is because I lost my mental focus and I let my emotions take over. I let my emotions take over. For those of you guys who don't trade, you might not know this, but anyone who trades, they know this. There's two sides to being a trader. There's the practical application, and then there's the psychology and the mental fortitude to be able to, and the self discipline and self awareness and self control side. So there's the mental, and then there's the practical, and what most people struggle with, and a lot of times they don't realize it, is the mental side, and I'm struggling with that right now. So let's get in exactly to why I'm saying this. So let's start with NVIDIA. So with NVIDIA, I had said that I had bought in here with going long. So for those guys who don't know, going long is when you are biased to having the stock go up. So going long, you want the stock to go up. Going short, you want the stock to go down. So I went long in here and I rode this all the way up, buying and selling on the way up. Now when I noticed that this line, when it hit this line, this white line, it was a gap close because it closed against this previous open, and when it did, it reversed and I shorted on this day in here. Well, let's get into exactly what happened there and why I messed up. Now, so I shorted it up in here yesterday with one option contract. I think it was like $145 or $46 strike price, which I won't get into the details on that. But anyhow, it opened up, and we'll just get on to what happened. So it opened up and just dropped off really hard, and I actually sold it down here in the 140, the high 148s, 149s. And as we can see, it went all the way down to basically my strike price. I made $150 on this, but it could have been the option. It would have increased exponentially down here, so it could have been a massive win, over $500. But I cut it short because I'm playing it safe, and I saw that the market was. I felt that the market was about to reverse, which it did at the time, and it ended up, so the market reversed, and I thought the market was still strong, so I wanted to sell it before this big reversal, when really I should have been focused on how good my entry was up here. I had such a nice entry up here that I was safe. I should have added to this pullback and added right here, and this would have been a massive win on the day, guys. If I would have done that and kept my cool and added here instead of sold over here and cut my contract, then that would have been the right thing to do. But I cut my winner short there, and I don't want to be doing that. So I've been doing that a lot with Nvidia. And then the other mistake, I did the exact opposite on CRON, guys. Let's go to the CRON trade. So this trade, I'm up 150 bucks on. I ended up for the day, I'm down $70 in my account. But this trade, even though I cut it short, it still covered some of my losses in CRON. I was pretty much break even in CRON. I lost most of my money on the U.S. oil contracts, which I had to cut loose. But $70 down for the day. Now let's go into CRON. Sorry, guys. Now if we look at CRON, I've been talking about this, how this stock is shooting straight up, and how it's unsustainable and all this, and and people are shorting, and I shorted in here somewhere. I can't see it on this chart, but I shorted somewhere in here. Now, and I've been marking off levels, and here's the thing. It opened up this morning and just squeezed super hard, but I had a chance to cover. If we look at the one, let's break it down. Let's look at the 20-day. Maybe we not right. Okay, sorry guys. Okay, so my short was right here. No, I'm sorry, my short was right here. So I had an awesome entry. I rode it all the way down. I was up huge. And look how hard it squeezed, guys. We've talked about this before. When I say squeeze, so many people shorted here that when more people tried to short at the open, buyers came in, and when the buyers kept the price up, the people who shorted had to then buy their shares back. So they all went to buy their shares back at the same time, and you get this massive reversal. I knew this was coming. I talked about this. I said it could bounce right here. I did the Fibonacci. Now, one other thing, I've shown the Fibonacci. I don't go by Fibonacci. That's just adds to your theory, but you never take one single indicator and say this is why it's going to bounce. You have to add it with multiple reasons. I only use the Fibonacci because I know other traders use it, so other traders are going to be going off of it. Now, so this is a massive short squeeze. I'll show you where I was even thinking of covering, but instead of covering the CRON trade, I covered the NVDA trade, which was the complete opposite of what I should have done. Now, I should have covered CRON because it is moving up so high. You know it's moving up this high that when it goes up straight up like this and it comes straight down, they do have these short squeeze pops, and it could easily drop down back down tomorrow. But it's too much risk at this point, and my exit point was down here. I messed up. I knew this. And I failed. So this is the other thing, guys. I learned a great deal today by this, and I only lost $70 doing it. If you want to get in the stock market, the whole thing about getting better is you have to make mistakes, and your mistakes are all going to cost you money, and you have to learn from them. So you have to make sure that your mistakes and your mistakes, you only have a small enough money that you can keep learning. So that's why I wanted to cut my losses at $70. Is I want to wake up tomorrow morning and be down $700 or whatever. Now, so that being said, I had a chance to cover. Let's get into, so when the stock's been up huge like this, guys, and I've been talking about how this is an unsustainable move, how it can't keep going. But at the same time, it's this crowd mentality. Once it had a massive drop from here, from the top down to here, where I should have covered was a 20% drop. It's going to reverse 5 to 10%, and that's what it did before it comes down more, very likely. And I became greedy, and I did not cover where I should have, and I was not quick enough in my thought process, even though I have it in my plan to do so. Now let's break it down on the daily chart and show where, I'm sorry, the 1 minute chart and show where I should have covered. So yesterday it was fighting this 1950 area, and it would not break it, and then and I was holding my contracts. Finally, post market, after the close, it broke through and it just dropped down, and it it broke this level. So that was good. So in the pre-market, I should have been watching this stock more and watching it grind up and pop like that. That would have made me a little nervous, but So after that, it sold off, and this green candle right here is green right now, but at one point it was a red candle. So this green candle, when it first came down, it dropped all the way. So all there was just a red candle. It dropped down to this level, and I looked at it, and I saw this red candle, and I immediately went over to I think it was this time frame, and I saw it was all the way down here. And I saw the red candle right here, and I saw how far down it was, and I was like, wow, I gotta cover. And I went to cover, and I was thinking about covering, but at the same time I was watching the NVDA trade, and before I could cover, it squeezed all the way back up. Guys, this is the other people in my same position that are shorting the stock, and it just squeezed up, and I thought it was gonna pull back. And then once it had squeezed up this far, I was like, all right, I'm just gonna ride the short and add on my share size later, because anticipating this move to end, and then I could add short and continue the ride down further, because that's what will happen. Like it happened back, if we go to the 5-day, 5-minute, we can see it happened on this day. It popped up and sold off, and back on this day too, it had a massive pop and sold off. So because those are the shorts covering and then piling back in. So I waited for it to retrace up to this line, and I saw it double top here too in a lower high, which means the previous high candle, this one is now lower. So I waited to see that, and I saw weakness, and I shorted right here and held here, and then I had to cover. Now, so what happened here is, even though people shorted and the stock is still slightly overextended, more buyers are coming in now here because they think it's a buy. So once I see this and I saw this and it curled, I covered right in here once it started to curl back up, because I know that this could run tomorrow, even though I should have covered way back down in here. But that being said, I got away with only a $70 loss. This could have been a massive gain if I only had covered right here. The stock is moving massive. If I would have covered here and I would have let my NVIDIA trade ride today, it would have been easily over $1,000 winner on the day. So if I would have executed my plan and had a more decisive plan and mindset coming into the open, I would have been easily up over $1,000 today. But instead, I'm down $70. But even though see, look at this. This is buying pressures. See this, I can't hold through this. It's too risky. I might get back short tomorrow. We'll see. I want to take it easy on the swing trading, so I'm trying to do less swing trading. So I want to focus. Hey guys, some of you guys might be wondering why I'm down. I would be up $1,000, but I'm only down $70, and even like on a move like this, how I'm only down $70. And the answer to that is because of the options that I'm buying and where the strike prices are. So I buy an option. So I'm not going to get into details, guys. I can't possibly teach you this. I'm not confident enough in it. But basically, the way the options work and the options I'm buying, the price increases exponentially as it gets closer to the strike price that you purchased it for. So that's why. So I'm strategically purchasing certain strike prices and to try to mitigate my risk. But really, if I want to cut the options out because they're not viable long term unless you are selling the options, which would be whoever's writing the options to me that I'm buying, because when you sell them, you get paid to sell them. Now, so when you sell the option, you get paid to take on the premium risk. When you buy the option, you have to pay for the premium, and that premium will decay over time if it doesn't move in your strike price direction. So as time goes on, you're losing value if you buy it and gain